So let's talk about what happened with the jobs report, because that's the real market mover of the week. Now, there was a little bit of market movement. Rates did go up a little bit after the Fed meeting. The S&P 500, dipped a little bit. So, stocks went down, rates went up, kind of expected given the tone of his meeting, but not a big market mover. However, this jobs report was a pretty big miss just on the headline. Job creation was 73,000 jobs. It was anticipated to be 110,000 jobs. So definitely a miss there. But what's interesting is some of the details. First of all, almost all of those 73 job creations were in healthcare and social assistance, not the most meaningful, driver of economic growth, let's say. And it should be noted that leisure and hospitality was very, very small number. In the past, that's been a driver. When you see jobs in leisure and hospitality, it means the economy is really thriving. People are traveling, people are staying at hotels and, renting Airbnbs and doing vacations. And that number being so low is an indicator of what's really going on in the greater economy. So that was interesting to see. But what is even more interesting is that if you look at the 73,000 jobs that were created, a component of that is what they call the birth-death ratio. And this is number of jobs. These are, small business jobs. And that number was plus 257,000 jobs. So, and I'm going to talk about some of the revisions that happened, that came out on previous birth-death ratios. But let's just say that if there's 257 jobs, quote, created because of the birth-death ratio, had that number been a little bit more appropriate, as I'll show you in a second, this jobs report could have actually been a net loss. It wouldn't be plus 73,000. It would be negative. And let's talk about why I think that would have happened. And you got to look back at the revisions that just came out on the previous birth-death ratio. And it was revised, the previous 2 months were revised down by 258,000 jobs in that component of the last two jobs reports. So in May, they reported 144,000 jobs created as part of the birth-death ratio. That number would have dropped to 19,000. So 144,000 down to 19. And in June, they reported 147,000 jobs created in that sector, and it would have only been 14,000. So is it coincidental that the last 2 months were revised negative by 258,000, yet this report that just came out here on August 1st showed an increase of 257,000 jobs? So do you think that's going to be revised? More than likely. And if it's revised by more than 73,000, which based on these historical adjustments, it certainly will be, that would have put this jobs report at a negative. So instead of 110,000 new jobs created, we would have negative we would have job loss, really, net job loss. So you guys, this is huge shift in the data. And with the Fed being so data dependent, this is interesting.